Yeah, good morning, everyone. My name's Anthony Power. I'm the CEO of Power Mining Analysis. And I'm very sorry I've lost my voice from yesterday, so we'll try and struggle for this one. But the panel today is going to talk about some of the biggest, or the biggest news story that occurred this year. And that biggest news story occurred on the 3rd of June. We had the likes of Core Scientific announce their contract with CoreWeave, a 200 megawatt hosting contract, which subsequently became 270 megawatt. And that conversation changed the landscape of where we are now with regards to Bitcoin mining. We've got a great panel here today. I'd like to introduce the panel, starting with Andrii.
Thank you. My name is Andrii Garanin. I'm the CEO of Hiveon Energy. Our team has expertise in three core divisions. It's energy. Sorry. Oh, sorry. Hopefully I'm loud enough. Okay, good. Yeah. So we have expertise in three core divisions. One is mining platform. We develop software for Bitcoin miners, for GPU miners, and the other division is energy part, which is our team, my team is developing, and the third part is AI. We were one of the largest platform, the largest platform until 2022, when Ethereum was proof of work. Before it changed to proof of stake, we were responsible for managing like 5 million devices online, and currently, we developed the new software which came out specifically for Bitcoin mining, and we're developing our projects in energy space, like energy domain. Currently, we're busy with things like demand response, frequency regulation, and our ongoing project, which is a bit separate in the battery storage, which we explore as well. So happy to talk about that. Thank you.
Hey, hey everybody. My name's Aydin Kilic. Can you guys hear me in the back? Way in the back? Okay, good. So I'm the president and CEO of HIVE Digital. We are the first public crypto miner ever, going public back in September 2017. We actually started as an Ethereum miner, and at our peak, we had 120,000 GPUs mining Ethereum. I believe it was the largest single-site Ethereum mine in the world, certainly that I've been to. And we grew as well as a Bitcoin miner. We're about 5 exahash today. And because we had a huge fleet of GPUs, specifically NVIDIA GPUs that we bought in 2021, we had a post-merge strategy, which we've executed on to repurpose the GPUs to do AI computing. So I think it's really great that we're all on this panel together. Sam and I were actually in Paris not too long ago, pretty much doing the same topic. So yeah, I'm just happy to be here.
Hi there. Can everybody hear me? I'm Sam. I'm Sam Tabar. I'm CEO of Bit Digital. We are a Bitcoin miner, and we have an AI business as well that I'll get into in a moment. But our active exahash is just under 3 right now, 3 exahash, and we have an actual business. And on the HPC side, we have a $275 million contract over 3 years, and more to come on that. I'll get into that later today.
That's excellent. So starting with you, Sam, you know, what makes the reliability of this technology appealing to the Bitcoin miners themselves, this HPC technology?
Well, I think one of the things, there are a couple of reasons. Bitcoin miners can leverage their existing skills on procuring specialized hardware, selecting the correct data centers, and of course you have to have a client. But the reason why this has been a very interesting thing for Bitcoin miners is because the margins are fat, they're fantastic. You'd have to have, you know, in our contract, Bitcoin would have to be more than double just to approach the zip code of where the margins are on the AI business. So that's been very interesting. We've been leveraging our skill set in procuring specialized hardware, and we understand which data centers to select, and we've connected those dots. This is a skill set that Bitcoin miners have. So we've leveraged on that, and it's attractive, again, because of the margins.
Yeah. Aydin, you've mentioned about, obviously, you were using your GPUs for Ethereum mining, but again, talk us through sort of like in a bit more context about the shift now into the HPC AI.
Right, yeah. So just kind of building on what Sam mentioned, the margins is literally an order of magnitude greater when you're running AI compute. So by the numbers, we're at a Bitcoin conference. I'm going to give you guys some specifics. So right now, an S21 is going to yield about 12 cents a kilowatt hour mining. Okay, we're in a bear market, to be fair, $50 hash price. But if you are running an H100 on a long-term contract, say at $2.50 an hour, that works out to about $2.50 a kilowatt hour. That's 20 times the revenue per kilowatt hour. And then people are going to say, yeah, but you're running out of a tier 3, it's more expensive. Sure, maybe your costs are 25 cents in tier 3. That's still a 90% fixed profit margin when you're running AI compute. So the profit density is about 20 times out of Bitcoin mining. And because the margins are more consistent, it's a beautiful hedge to the very volatile nature of Bitcoin mining. Now, that's not to say Bitcoin mining is not a good business. It can be a great business, but you really have to like ride the waves, know when to deploy capital, have a good treasury management system, and that's a whole other thing. But I think the common thread is obviously having large-scale power and really understanding how to have high-density data centers that you're either running. I mean, you know, our largest site is about 70 megawatts in New Brunswick. With AI, you might only have 2, 3, 4, 5 megawatts, but for example, the new generation of NVIDIA hardware coming out, the Blackwell NVL72, is 120 kilowatts per rack, which is like super, super, super dense. So there's commonalities, but there's nuances.
Andrii, your company in the Ethereum mining days had a significant amount of the managed service in that industry. Where do you see the benefits of these mining companies now moving into the sort of like the HPC space themselves?
Oh, well, miners, I believe, the best suited for developing, let's say, like bringing up the most creative ways how to connect to the existing grid infrastructure. So I believe the biggest value from the miners is moving to the HPC and to AI space is that miners already have existing infrastructure, existing connection points where they can really move quite easily without spending years into development. Basically, time to market is extremely fast for miners who already have existing infrastructure. So that it's really adding few racks, a few containers for which are tailored for HPC for GPU mining, for GPU operations. And we believe that this will be really when real AI revolution kicks in, because we see that the demand is still a bit around the corner. It's not yet fully in place. So we believe that miners will be the best positioned in terms of just to expand and move into this space much faster than, let's say, traditional data centers who will spend years of development and would need to deploy large-scale data centers, because miners are much more flexible than that.
Yeah. If we go back sort of like 9-10 years ago when mining, actually, Bitcoin was in very simplistic in those days. And you probably had the likes of, a very young Ben Gagnon, probably mining in his garage, and the likes of maybe Sheldon Bennett, who was 10 years ago was working for Bitfury, then he formed DMG Blockchain. But what we've seen over that last 10 years, we've seen an immense amount of technology and change in the mining industry. And, we've now seen the big mining companies take over the hash rate. No longer can sort of like the individuals really scale any sort of like benefit from this. So in terms of Bitcoin miners now and, being established, how can they optimize their infrastructure for both Bitcoin mining and the HPC hosting model? Start with you, Aydin, on this one. Aydin.
Oh, I mean, how do you optimize it? I think one thing that would be helpful for the audience to know is that you have two totally different types of infrastructure, right? So, a nice like convenient analogy is to think of like a Bitcoin mine as a very rugged facility that's like a Ford F-150, and a tier 3 data center is highly refined, redundant, air-cooled, and it's like a Ferrari, right? So it's not like we have GPUs beside ASICs all kind of happily getting along. two totally different things, right? And so the commonality is that they're data centers, and I would say the distinction, to answer your question succinctly, is that we're not talking about containers in West Texas in the middle of a sandstorm. We're talking about a proper data center, like a building that has good bones. Like our facility in New Brunswick, I like to joke and call it military grade Bitcoin mine, right? It's sort of our flagship facility. Our facility in northern Sweden as well. And so these facilities, with the addition of cooling, redundancy, and some UPSs, you can get to that from that tier 0 to tier 3 level, right? So again, we're not talking about converting containers in a desert to doing HPC. We're talking about a building that has that envelope, that has a solid foundation that you can add all the requisite additional components, right? So I hope that answers it.
I mean, when you talk about the sort of like the profitability, Aydin, it sounds like if I've got enough money in the bank, I can sort of like just start putting this money into this business. Andrii, I mean, how challenging is it to enter this space as a new person entering? What are the barriers to entry for new entrants?
Well, I guess I mentioned briefly about that. I believe the barriers to entry to this market would be availability of existing infrastructure, because first of all, we are, let's say, if you talk about constraints for GPU servers or for mining servers, we are talking about not really about the availability of power, because I think the panel before us was discussing that there is enough power actually available, let's say, which you can tap into, let's say, in renewable space, or you can deploy, build out a new power station, like in solar and wind, which you can do quite quickly. But what is real limiting factor is the limitation in the grid. So the grid is the current, let's say, current bottleneck, which would limit developing this industry. Because I think there was even a case in Norway. Actually, I come from Europe, which the developments in Europe are much closer to me. What's happening there? There was a recent attempt by Norwegian, I believe, arms manufacturer to expand its operations, and they couldn't do it because all the power was taken by a data center nearby. So I believe that this will be a limiting factor, actually, how we move into the domain of expanding into our AI operations. And I believe that what I've seen actually myself is just I can share that miners were the most creative industry, right, deploying themselves in very unexpected ways. And I've seen miners which are deployed in extremely, let's say, hostile environment when the price of energy are high. But they managed to tap into different sources of income from DR or from sales of heat or any other creative ways. And we see that it will be a competition for places to connect, to be able to expand into that. And so I believe miners are best suited for that.
Yeah. And Sam, from your perspective, because you've got a client at the moment, you've got a great annualized revenue coming through, which is going to increase very shortly. What do you say are the barriers to new entrants coming in? If you're trying to steal what you're trying at the moment, what's going to be the bottlenecks that they're going to find?
For miners?
Yeah.
Just to add to what Aydin said, just before I answer that question, there is a misconception that, just because a Bitcoin miner has access to megawatts, or they could simply retrofit their existing data center into an HPC center. That's really not true. That's like building a port for a yacht and parking your jet ski in there. That'll never happen. And if you do that, you're spending money for no reason. There are certain characteristics that an HPC data center has that a Bitcoin miner data center doesn't. For example, power, like redundancy power. So you have to build redundancy power for HPC. You don't have to do that for mining. There's a whole slew of other things. But in terms of the challenges for Bitcoin miners going into HPC, I think there's a few things. The network design for an HPC center is much more complicated than it would be for a Bitcoin mining data center. And also, Bitcoin miners are very used to never having clients. So they just mine for themselves. So actually getting a client is a special kind of muscle. It's putting the client first. And I don't think a Bitcoin miner ever has put a client first. they mine for themselves. So you have to actually go out there and get customers. So that's a muscle memory that Bitcoin miners are going to have to figure out. And also bandwidth. Like for us, we've been able to score this great contract, and there's more to come. But we've done this with the existing team, and it's been, no, excuse my language, but it's been kind of a shit show getting all these inquiries. It's a good problem to have, but you have to hire people, the right people, which we've been doing. We're looking forward to certain announcements in the future. But you have to have the proper organizational design to have a sales team, a professional sales team, in order to, complete the sales process, top to, the embryonic stage to closing that contract. And that's a process that Bitcoin miners do not have yet. And we are building that. And we've been able to get these contracts and these economics without it, but that's not sustainable. And that's why we have this sales team that's coming up to deal with all the reverse inquiries that we've been getting.
So Aydin, from your perspective at the moment, and the fact that the Bitcoin mining price at the moment, or the Bitcoin price, is unknown. We don't know what's going to happen tomorrow, next week. How is the sort of like HPC revenues able to sort of like provide support to your mining business at the moment?
Yeah, I think I touched on that in my opening comment, but just to kind of reiterate. So, for example, right now, we don't know what Bitcoin price is going to do, but I'm going to touch on Bitcoin mining a little bit because we're at a Bitcoin conference. So what we track as miners is hash price, right? So you effectively have this statistic that we track daily that is a function of Bitcoin price and network difficulty. Hash price is the dollars per every petahash you have online that you earn per day. It's agnostic. It's whether you're in Kazakhstan or Canada, you get paid that amount. So what happens is, as the network grows and hash rate commodifies, so 7 years ago the S9 had 13 terahash, and nowadays the S21 has 200 terahash. Hash rate is getting commodified. We're producing more hash rate cheaply. So as time approaches infinity, hash price goes down, but each machine has more hash price, right? So why this is important, why I'm explaining this is statistically and almost using calculus, you can track the local minima of hash price and you can plan your bottom. So what I mean is, in the bear market of 2022, the lowest hash price we saw was $50. It never went below that. That's when FTX crashed and Celsius and all that craziness. That's also when a couple companies that we know went bankrupt. By the way, just not to promote Hive, but we mined profitably through every single quarter for the last 3 years. And in 2023, we hit a $55 hash price. Post-halving, we finally saw a $45 hash price. Why does that happen? Again, commodification of hash rate, but moreover, you have more efficient machines. So this is sort of like the calculus of how we plan ahead. So I don't want to be up here as a Bitcoin miner that just announced 100 megawatts in Paraguay saying like Bitcoin mining's bad. Like, hey, don't get me wrong, it's a really good business too. But to your point, and to build on what Sam said, AI compute, really what you're doing is you're providing infrastructure as a service, right? So you've got your tier 3 data center, and then you have to build these clusters of GPUs, right? And with that comes the fabric, as Sam alluded to, the networking. So if you want to build proper NVIDIA reference architecture, you have to have InfiniBand fabric. So imagine like a spider web of GPUs. Each, like one server has 8 GPUs, and one rack has 8 servers. So you need every single GPU talking to the other GPU as quickly as possible so you can move back and forth as much information quickly. Why does that matter? If you're training a large language model, which has, 70 billion parameters, 7 billion parameters, but you're training it on hundreds of millions of data points or tokens, etc., you have to move a lot of data quickly. And so that, when you're selling that service, these are jobs that have a finality, right? So you train, it could take hours, days, or weeks to train, and then the job is done. And then the idea is that people will run inference on that model that now has some like useful information, and that your ongoing recurring revenue is inference based. But that's more of like a quick query, right? So you have to design this GPU-based architecture, which, by the way, just to help educate the audience, in Bitcoin mining it's about terahash. In AI, it's about teraflops, VRAM, and memory bandwidth, right? So that's actually what's going on. And then you look at a large language model, you say, well, how many parameters does it have? What's the size of my input and output window? And that's how you can actually quantify what's happening, right? So, sorry, I'm an engineer, so I'm just kind of giving numbers. Like, I don't want to just hand wave and be like, hey, AI is the future, everybody. It is, but you have to know how to build the runway, right? And I think companies like Hive and Bit Digital, we started monetizing, actually doing it, whereas a lot of crypto miners are like, hey, we have power. Like, that's good, right? Well, there's a lot more than that. Not a little bit. There's a lot more than that.
So, Andrii, from your side, in terms of the software side, do you see any problems with mining companies trying to, co-locate HPC in some of the locations? Do you see any problems with that sort of model?
Well, from maybe say we're not active miner, but what we can observe from our clients that quite a lot of them moving into this space. I would say there are challenges in terms of from engineering to allocate the HPC servers next to it's because it's quite different operation. I think it's a pretty much already standardized system which you can deploy. There is so much limitation or so much requirements which you need to implement to deploy such a system. HPC and AI system, these are much more, let's say, gentle and much more requirable in terms of energy stability, internet access. You really need to have this, so you cannot really deploy it on Starlink. You need to have some kind of certain infrastructure criteria to be met in order to be successful there. But we'll see that I think especially those miners or my colleagues here who deploy it, utility scale data centers, I believe they're the best suited to deploy much more sophisticated infrastructure. So in that case, it's especially for those who are already established in the domain of crypto mining or Bitcoin mining, for them it would be easier because they already scaled enough to the level when they can easily move into that new domain for them. And they are, as I mentioned before, the most flexible, the most fast-moving, let's say, industry players, if you compare to any traditional or any other players who operate in the traditional domain. Because we worked with other data centers who are APC contractors who deploy traditional data centers, and we see that how they approach to deployment, it's much more, let's say, conservative in terms of backup systems, in terms of the whole engineering setup, but miners are much more flexible on that.
And sort of to start wrapping up the conversation now, we're not trying to emphasize Bitcoin mining's bad, but talk to us, Sam, start with you, about where you see Bitcoin mining and the HPC industry over the sort of next 2 to 3 years from each perspective, please.
Look, the current conversation at the moment is about HPC with respect to Bitcoin mining because the margins are there. If Bitcoin goes to 200,000, and I believe it will eventually, but I just don't know when, nobody does, you got to just return shareholder value, and you have to build out a business where the margins are really great. Bitcoin would have to more than double today to even approach, as I mentioned, the margins that we have on the AI business. And there is an interesting dynamic going on. I'm in meetings every day with shareholders, and there is a very clear bifurcation of what retail wants and what institutions want. And the institutions want us to build the HPC business because they're able to build out the future cash flows, and they can model out the valuation very well when it comes to the HPC business. They're not really able to value the Bitcoin mining business as well because they don't know where Bitcoin is going to be. Everybody believes that, not everybody, but most people believe that Bitcoin's going to go up, but we just don't know when. So this whole conversation, including this panel, would not exist if Bitcoin was suddenly 200,000, for sure. And eventually it'll get there, as I mentioned. But for now, if you want to return shareholder value, you got to build out the HPC business, especially since we have the momentum right now, and not completely be too aggressive on the exahash growth. That's our position. And I also think in the future, capital markets are probably going to force Bitcoin mining companies that have a successful HPC business perhaps spin out the HPC business because the multiples for the HPC business are very different than the mining business. And so capital markets will probably force us to split those businesses. And I think that those who are having a very successful time building the HPC business, you'll start seeing that separation happen.
From Aydin, your perspective, obviously, you're doing both services at the moment. So talk a bit more about the Bitcoin mining, where you see that in the next 2-3 years, and also how you're growing your HPC business exponentially as well.
Yeah, so I think in the next 2 to 3 years, I would like to say the next 9 to 12 months, we hope to see a proper bull market. What do I mean by that? A proper bull market was 2021, when hash price, which I was explaining to everybody, was, today it's 50. Back then in 2021, it was $300 to $400 a petahash a day. So to put that into context, we would need Bitcoin at about 6 to 8 times the price it's at today in order to be where, for mining, you can obviously be back where they were. That would be $300,000 to $400,000 Bitcoin. Now, I'm not here to be overzealous. It's fun to be overzealous, but I'm not going to be. So I think because hash price commodifies in the next bull market, we should expect to see $100 to $200 hash price. So I think it's very reasonable to see $100,000 to $200,000 Bitcoin in the next 9 to 12 months, especially, you know, with Trump being here at the, I mean, come on, we got a presidential candidate like speaking at this conference. It's a moment in time, right? So I think that's very special. And to Sam's point, if Bitcoin was at 200 grand, people wouldn't really care about HPC as much, but HPC is seen as this incredible hedge. And so, yeah, it's a nice, steady, high cash flow business. But being that we're publicly traded companies, we have to think of cost of capital, multiples. And so that's why we have this kind of, two-tier or dual-pronged strategy, if you will, where we want to build the footprint of data centers that we own and operate that are tier 3, as well as continue to own and operate green energy mining Bitcoin. And by the way, like our whole thing is green energy too. I forgot to mention that. So yeah.
And Andrii, yourself?
Just real quick, I believe that the Bitcoin mining is here to stay. This industry has proven to be very robust and has kind of come through several crises and really stay there. And we can see that the companies are extremely successful. And right now, if you talk about major operators, everyone is expanding, I guess. So it's not that everyone is want to stop operations. HPC definitely, and AI would be it's a new domain when most of the larger players will move into. We still need to see how the market will shape up for the compute itself, because it's still, as was mentioned that by Sam, that you need to be able to sell it. First of all, you need to train your team to do something which has not been done before. But what it's actually leading to is that there will be a combination that miners will be moving into the HPC space, and we'll see quite interesting developments from there.
Yeah. I just want to take us back to the start of the conversation. And, this conversation at the moment is very current because of that contract that was announced back on the 3rd of June. I was fortunate to go to Core Scientific's Investor Day, along with the real analysts from Wall Street. And being in that room with 40 Wall Street analysts, the questions that were asked of Core Scientific revolved around HPC. That's the current conversation. But take nothing away, Bitcoin mining is here to stay. And as the panel has said already, this is the bull cycle. When Bitcoin price gets to 150,000, the conversation will change. I had an article published this week for Compass Mining, which talks about the impact of that contract back on the 3rd of June. And I know that Sam and Aydin have two public companies that have seen their share price do extremely well since the 3rd of June. More so when you compare to some of the pure Bitcoin mining play companies. And so, spend some time, have a look at the information that's out there. But this is a great topic, and it's a great panel, and really pleased to have been part of it today. Thank you very much. Thank you.
Thank you.
Thank you.
Next year, we are bringing the Bitcoin conference to the American West, Las Vegas. The brightest minds in the world will converge to deliver Bitcoin history. Buy your tickets now at b.tc/conference/2025.